Most budgeting advice tells you to track your spending. Zero-based budgeting tells you to plan your spending before it happens, every single pound, before the month starts. Until your income minus your planned spending equals zero, not because you have spent everything, but because every pound has been deliberately assigned to a purpose, whether that is rent, food, savings, or investing. It is one of the most effective budgeting systems ever developed, and almost every explanation of it online is aimed at Americans with dollars, 401ks, and health insurance bills. This video is the UK version. By the end of it, you will know exactly how to set up a zero-based budget on a real British salary in 2026, which tools to use, and whether this system is actually right for you. The core principle of zero-based budgeting is simple. Every pound of your income is assigned a job before the month begins. The budget starts at zero and you work through every category of spending and saving until every pound of income has been allocated. Income minus allocations equals zero. This does not mean you spend everything, it means every pound is deliberate. If you earn £1,883 per month, you create a plan for all £1,883 before the month starts. Some of that goes to rent, some to food, some to transport, some to savings, some to investing, some to a personal spending allowance. When every category is filled, the total matches your income exactly and nothing is left unaccounted for. The difference between zero-based budgeting and simply tracking your spending is the direction of control. Tracking is reactive, you spend money and then review where it went. Zero-based budgeting is proactive. You decide where money goes before you spend it. This distinction matters because it fundamentally changes your relationship with money. Instead of hoping there is something left to save at the end of the month, you decide how much you are saving at the start of the month and treat everything else as what's available to spend. The concept was popularized in personal finance by Jesse Meekum, the founder of the You Need a Budget app known as YNAB. But the principle predates any app and can be implemented with nothing more than a spreadsheet or even a pen and paper. Here is exactly how to build a zero-based budget on a UK salary. We will use a monthly take-home pay of £1,716 as our example, which corresponds to a £25,000 gross salary as we covered in the salary series. Step 1. Write down your monthly take-home pay, not your gross salary, your actual net pay after tax, national insurance and pension contributions. This is the only number that matters for budgeting purposes. In our example, £1,716. Step 2. List every fixed essential expense. These are costs that are the same or very similar every month. Rent or mortgage payment, council tax, energy bills, though these vary by season, broadband, mobile phone, any debt repayments including student loan deductions if applicable, any subscriptions you cannot or choose not to cancel. Total these up. In our example, using the budget from the salary series, fixed essentials total approximately £645 per month. Step 3. Estimate variable essential expenses. These change month to month but are genuinely necessary. Groceries, transport, toiletries and personal care. Medical expenses where relevant. Be realistic rather than optimistic here. Most people underestimate their grocery and transport spending. In our example, variable essentials total approximately £255 per month, bringing total essentials to £900. Step 4. Allocate your savings and investments before your discretionary spending. This is the most important step and the one most budgets get wrong by doing it last. From our remaining £816, decide how much goes to savings and investments first. Using our earlier priority order, let us say £150 to a stocks and shares ISA and £50 to an emergency fund top up, totaling £200 to savings. Remaining balance is now £616. Step 5. Allocate discretionary spending. This is everything that's not essential and not savings. Eating out, socialising, clothing, entertainment, hobbies, personal treats. Divide the remaining £616 across categories that reflect your actual life. Perhaps £100 for eating out and socialising, £50 for clothing, £50 for entertainment and subscriptions, £50 for personal care beyond essentials, and £100 for a general miscellaneous buffer. Total discretionary, £350. Remaining balance, £266. Step 6. Assign remaining pounds. If any income remains unallocated after steps 1 to 5, assign it deliberately. In our example, £266 remains. Options include adding it to the emergency fund, increasing the ISA contribution, building a sinking fund for a known future expense like a holiday or car service, or directing it to a specific short-term savings goal. Whatever you choose, assign every remaining pound to a name category until the balance reaches zero. The total is now £900 essentials, plus £200 savings, plus £350 discretionary, plus £266. Additional allocation equals £1,716. Every pound has a job. Budget complete. This is where UK budgets differ from the American versions you will find most commonly online. Council tax. This is a significant and often overlooked fixed expense in UK budgets. The amount varies enormously by local authority and property band, but averages around £150 to £200 per month for a Band D property. Single occupant households get a 25% discount. Students are exempt. Make sure this is explicitly included in your fixed essentials category. Student loan repayments. These are deducted directly from your salary before take-home pay, so if you are on a Plan 2 or Plan 5 loan, the deduction has already happened before you budget. However, it is worth knowing exactly how much is being deducted so you understand your true gross to net picture. We cover student loans in detail in a separate video. TV licence, £169.50 per year in 2026, which works out to approximately £14 per month. A small but genuinely fixed UK expense that belongs in your budget, national insurance, like student loans. This is deducted before take-home pay. But understanding how much you pay in NI is important context for the broader picture of your total tax burden. Seasonal energy cost variation. UK energy bills vary significantly between winter and summer. Rather than budgeting the monthly average, consider building a small sinking fund buffer in summer months to cover higher winter bills. Many energy suppliers now offer fixed direct debits that smooth this out automatically. You do not need an app to zero-based budget. A spreadsheet works perfectly well, but if you prefer a dedicated tool, here are the main options available to UK users in 2026. Why NAB? You need a budget. The most feature-rich zero-based budgeting app available, built specifically for this method, and genuinely excellent at it. The downside is the cost, approximately £99 per year, and the learning curve. It works in pounds and supports UK bank connections. For anyone serious about this method, it is worth the investment. Emma, a UK-focused budgeting app that connects to your bank accounts and categorises spending automatically, not a pure zero-based budgeting tool, but its budgeting features can be configured to work in a similar way. Free tier available with a paid upgrade. Monzo or Starling pots. If you bank with Monzo or Starling, their pot or space features allow you to physically separate money into name categories at the start of the month, which is a practical implementation of the zero-based budgeting principle without a separate app. A simple spreadsheet, Google Sheets, or Excel with a basic income and expense layout. Completely free, fully customizable, and surprisingly effective for most people. We can cover how to set one up in a dedicated video, if that would be useful. Mistake 1. Using gross salary instead of net take-home pay as your starting number. Your budget must be built on what actually lands in your account, not what your employment contract says you earn. Starting from the wrong number means your budget will never add up correctly. Mistake 2. Forgetting irregular expenses. Annual or quarterly costs like car insurance, MOT, Christmas spending, or a summer holiday do not appear in your monthly budget, but they will derail it if you have not planned for them. The solution is to divide annual costs by 12 and include a monthly sinking fund contribution for each one. Mistake 3. Setting discretionary categories too tightly. A budget that does not allow you to live a normal life will not be followed. If you genuinely enjoy eating out, include a realistic eating out budget rather than setting it to zero and then feeling guilty every time you go. Guilt is not a budgeting tool. Mistake 4. Giving up after one bad month. Zero-based budgeting requires adjustment. The first month will not be perfect. Neither will the second. The method becomes more accurate and more intuitive after 3 to 4 months when you have a realistic picture of your actual spending patterns. Most people who give up on budgeting do so in the first month before the system has had a chance to work. Mistake 5. Not revisiting the budget when income changes. A pay rise, a change in rent, or a new expense means the budget needs rebuilding from scratch. Zero-based budgeting is a monthly process, not a set and forget system. Zero-based budgeting is particularly well suited to people who feel like money disappears without knowing where it goes. People who want to be very intentional about saving a specific amount each month. People paying off debt who need tight control over every pound. And people who are building towards a specific financial goal with a defined timeline. It is less suited to people with very variable incomes, for whom budgeting from a fixed monthly income figure is inherently difficult, though a modified version using last month's income as next month's budget can work. And it may feel unnecessarily restrictive for people on higher incomes who have already automated their savings and are comfortably meeting all their financial goals without detailed tracking. The honest truth is that any budgeting system you will actually stick to is better than a perfect system you abandon after 3 weeks. Zero-based budgeting is one of the most effective methods available, but it requires time and consistency to implement well. To bring it all together, zero-based budgeting assigns every pound of your income a deliberate purpose before the month begins. Income minus allocations equals zero. The 6 steps are: write down your net take-home pay, list fixed essentials, estimate variable essentials, allocate savings and investments before discretionary spending, assign discretionary categories, and allocate any remaining pounds to a named purpose. Use Why and Abe, Emma, bank pots, or a simple spreadsheet. Include UK-specific costs like council tax and TV licence. Avoid the 5 common mistakes. And give the system at least 3 months before deciding whether it works for you. If this video helped you understand how zero-based budgeting works on a real UK salary, subscribing takes 2 seconds and means you won't miss a video. We post twice a week on making your money work harder in the UK, and next up, we are tackling the emergency fund question that causes more confusion than almost any other in UK personal finance. Exactly how much do you actually need?